Cathie Wood's ARK ETF just entered a bear market. That's interesting. Sign of the times to come, asks MarketWatch. So let's read this. And look, I'm not anti-Cathie Wood. I find it's just this ebb and flow of stuff just every couple years. Oh, hell, every couple months. What was it? The repo market last year. We had the inverted yield curve a few months before that. We have Cathie Wood now. We got Bitcoin. I mean, it comes and goes. And the one thing that should never change is VTI. But all right. So a lot of people are big on Cathie Wood. We've been through this before. All right. So this is MarketWatch. I haven't read the articles. Read together. And let me tell you, so Cathie Wood's someone attractive, and she's a woman, an attractive woman with glasses. So that makes her sophisticated too, obviously. That always is good for clickbait. I mean, that's just a fact. Always have a lady in financial industry is a win. I do totally subscribe to the idea that we need more women in this business. I do, but I don't want to patronize them and say, we don't have women because they don't like sales. No, that's not true. We don't have women because they don't like numbers. No, that's not true. Lots of women realtors, they're all in sales. Lots of women CPAs, they're all in accounting and dealing with math. I don't know what else it could be. Lots of women estate planning attorneys, they know how to do personal relationships. So tons of women in this business. In various businesses, for some reason, our business has been very patronizing. Oh, we'll define it down so they can jump into our business. Screw that, man. So we got lots of women. We could use more in this business for sure, in the financial advisory. And I hope as we go forward, we get more, but you don't do it by patronizing. All right, so let's read about Cathie Wood. ARK Investment is one of the fastest growing fund managers in 2020. Shocking. Just saw its flagship company enter a bear market. Remember, a bear market is 20% decline, and so it looks like she's there right now. Highlighting a brisk sell-off in growthy technology-related stocks amid a persistent rise in interest rates. So I haven't looked at Tesla. What has Tesla been doing lately? Let's take a gander and see. Yeah, wow. So Tesla is down from what's that? From the last three, it was at 880 on January 8th, and now it's down to 653. So we take our trusty calculator, we go 880 minus 653, divide by 880. It's down 26% in 3 months. So that's a bear market. If you didn't expect Tesla to get knocked around like that, then there's something wrong with it, because it's just a volatile stock, no other way around it. Let's take a look at, I'm just curious what Amazon has done. I have no idea. This is how much I don't pay attention. It just bores me. All right, so Amazon is down. It was at 3,400, 3,380. Now it's at 3,005. So it's 3,380 minus 3,005 divided by 3,380. And that's down to about 11%. That's not that big of a deal. Let's just look at it. I'm curious. I'm going to look at the big ones here. Apple was down 2.5% yesterday. So 144 to, this is over 3 months, by the way. 144 to 122. So that's, again, probably, I don't know what that is, 10%, something like that. Let's look at the big one that was Netflix. Netflix never had any earnings. Netflix, I'm not even sure what the ticker is. NTF. Nope. So let's go to Netflix. It's NFLX. So NFLX. So Netflix was at 588 a few months ago. Now it's at 520. So not a huge climb. Anyway, so there you go. Just last one. Let's look at Google. GOOG, or Alphabet, what they call it. GOOG. Finney. He's looking there. He's getting in trouble, that dog. So it's not that much. All right. Anyway, so I don't know what else Cathie Wood's. I'm just using the big ones that I'm familiar with. But Tesla's down 25%. All right, so a bear in ARK. And so you can see here, ARK Innovation ETF is down, what's that, $30. All right, well, it's not that big of a deal. The Teladoc Health, Roku, Zillow Group. Oh, well. Let's see, Tesla. All right, so the ARK Innovation ETF boasts $24 billion in assets, but its focus on buzzy companies, including these ones I just said, have proved a boon, but now as of late a bane for the fund. The decline for the fund comes as a NASDAQ composite is down 2.7% yesterday to register its worst to register its worst 2-day skid for the tech-laden index since September 8th. I thought they were going to say it since like 2000. All right, well, that's no big deal. Investors have been eschewing tech in favor of so-called value stock. Oh, really? Let's take a look at what value has done compared to growth lately. Let's take a gander, huh? Let's gander. So far this year, the value index at Vanguard is up 4.1%, where the growth index, the large cap growth at Vanguard, is down less than 1%. Let me let Finney out. That portfolio visualizer might be at the end of February, so I don't think it includes today. So let's look at Market Watch and see year to date on Vanguard Growth ETF. Let's see what we got here. Let's see here. Year to date return. I used to have it on here. Let me pause it real quick. Hold on a sec. I guess Market Watch doesn't put the year-to-date anymore, which is frustrating. So I used to like that. But the Schwab does, and Schwab shows the Vanguard Growth Index is down 1.64 year-to-date. All right, that's just not that big of a deal. If we go 6 months, it's up 8.24 for 6 months. All right, so I wonder if I can compare this. Anyway, Schwab's website is freaking awesome. That's all there is to it. Let's look at VTV. Vanguard Value is... so far, year to date, this guy is up 7.37. 6.2. So, 6-7%, 7.5% difference there. Not a huge differential there, but I would think there'd be more opportunity in the value still. And don't forget, momentum does play a role. But anyway, let's look back at Cathie Woods again. All right, so investors have been eschewing tech in favor of so-called value stocks, which are considered undervalued, especially against growth stocks, and which have records or prospects for outgrowing peers. That's the growth stocks. A rise in the 10-year Treasury yield, which at 1.474 on Wednesday, has underpinned the rotation out of tech and tech-related companies into energy and financials, which are expected to perform better as the economy recovers. Is that true? I don't know. Tech names are more vulnerable to a pullback in a higher interest rate regime because those stocks don't offer a yield and operate in areas considered overvalued. But okay, that's all. That's all hindsight being 2020 there for sure. All right. Woods is known for targeting investments in growthy names and disruptive innovations. Over the past year, ARK has seen the assets in 7 exchange funds explode more than tenfold. But now investors are questioning how the high-flying fund manager will spawn to richer yields and a shift in underappreciated companies as vaccine rollouts and expectation for COVID aid packages help drive bets to less loved sectors of the market. Look, man, it's just people say, hey, tech stuff was probably overvalued relative to the value stuff. Now we're just going to transition. It's just a shift. It happens all the time. Cathie Wood recently told CNBC she's not perturbed by yields and is anticipating a pullback, vowing to double down on some bets. How do you double down on some bets if you don't have cash? So let's take a look how much cash Cathie has here. I know it sounds like I'm against her. I'm absolutely not. I just don't really care that much. ARKK. But it's interesting to find out. So how are you going to double down if you don't keep cash? Let's see how much cash he keeps on the side. So here's ARK, and we're going to look at holdings. Now, look, if you want to buy, I don't care. I don't own it. We got holding. I want to see cash. Yeah, she only has 11 million, so she only has 7 basis points in cash, man. So this is a good fund if you want to beat the market. It's only got 48 stocks. That's what you want. That's what you want. And Tesla's by far and away her number one holding. Look at that. CRISPR is down 22% year to date. CRISPR. Anyway, so that's interesting. How are you gonna double down if you don't have cash? I've never understood that. And she only has 11 million in cash. All right. She reportedly upped her stake in Zoom, which has been a beneficiary of work from home trend as of late. Yeah, well, I'm on Zoom all the time. It's fun. Not Zoom. Well, I guess I am on Zoom. Yeah. Didn't she have Zillow? Or is it Zoom? I thought it was Zillow. Maybe it was Zoom. No, Zillow Group. Okay. Gotcha. She bought more Tesla as electric vehicle makers shares slump. All right, so she bought down. ARKs are down. The shares are down 8.6 so far this week, hanging on to a less than 1% year to gain sort of fee. Okay, there you go. Look, all high flyers come back to earth at some point. Look, man, Chris Davis from the Davis New York Venture Fund, man, 20 years ago, let's say 2021, 15 years ago, something like that, he talked about that. He said, if you're going to be a high flyer, you're going to be a low flyer too. You're going to fly high and fly low. As long as you don't get shot down, the high flyers should do okay relative to the market, but you got to hang in there. I don't invest in any of this. I just invest in VTV, VTI, VDIGX, and VBK. That's it. That's all I got. So just FYI, I own nothing. You shouldn't invest what I invest in, because if you did, you lose all your money. But if you want to invest in Cathie Wood, maybe now's the time to do it. She's down 20%. That's not a bad time to invest. But all right, love to hear your thoughts. We'll see you